Hi, good morning, guys. Welcome, Doc. Welcome, everyone.
Hi, everybody.
This is our second live of the year, and we are going to have our weekly SPX calls directly streamed on X and YouTube. And together we have Doc. Before I introduce yourself, Doc, I'm just going to run through our disclaimer very quickly, and then I'll let you introduce yourself as well. All right. So, Doc, you've been with us for just over a year now. So we're very excited to have you. You've been managing kind of like a couple of the trading room channels, especially focusing on zero DTEs and, selling credit spreads, which is your obviously main strategy. But I'll let you introduce yourself, maybe tell us more about your experience and, how you trade. And then we go into our SPX game plan, and we're going to show you the daily plan for the day.
Okay, hi everybody. They call me Doc McGraw. I won't go into the backstory of how I got that nickname for now. And yeah, I've been on with Mentor Q here for about a year, pretty much when they got started. And I've been trading SPX, mostly credit spreads, from when it was 3 times a week. And I've been trading options and stocks for, I don't know, 40 years or something. I'm an old man, so I've been doing this for a while. I'm a retired psychologist, but I've been retired for quite a while. And this is what I do. Got involved in SPX, and then as I learned more, I learned about the role of open interest, the role of gamma, and then into the Greeks. And what attracted me to Mentor Q was the easy way to set up the charts on TradingView and to find the levels and where the extreme levels are for selling credit spreads. And then I've evolved to doing more directional trading as well, buying puts and calls, pretty much based off of the levels and based on nuances that aren't in the levels, which is what you get with some of the stuff that I write up. I'm not going to go through all that here, and I'm going to preface it by saying I'm not a Greek god. There's nuances in the Greeks and the interactions between Vega and Gamma and Charm and all that I'm aware of, but I can't give you chapter and verse formulas. I kind of seem to just know how they work from doing this for a while. Okay, so that said, I'm just going to kind of go into what I'm going to sort of use my daily plan that I write up every day. And if you guys follow me on Twitter, you'll see it on X, and it's in Mentor Q's premium member trade structuring channel. And I texted to some friends, and that's my plan. And Fabio's sharing it there. And so economic news coming out this morning, to me, it doesn't really matter what it is. I mean, it matters a little bit, it matters what the market reaction is. And so that's a little asterisk in the back of my mind that at 8:30, we're going to be getting something. We have a Fed person talking in the morning, and then we have something at 10 o'clock. And of course, we had the NVIDIA presentation of the NVIDIA CEO at the CES yesterday. So all that's lurking in the background. And the other thing I mentioned, I've got a reference yesterday. Yesterday, we had somebody that I call the IC whale. Other people on X, have mentioned him. He's not some secret elusive person a lot of us know about. And he had an iron condor at 59.70.75 yesterday. I'm referencing it because it's important for today. And at 59.0510 at the bottom yesterday. And the reason I mention this is yesterday we opened above his iron condor, which caused this crazy reaction where we flew all the way up to 15 and then mean reverted back inside his iron condor only to expire right at his long strike, which was 59.75. Not a coincidence that we ended up there, I think. And so what the whale does is he uses what's called a martingale simulation. It's pretty simple. He takes the loss, and today he doubles down. So he's got twice the number of contracts there. If you look at the open interest in your options chain, you'll see it. If you were watching the time in sales after the market closed, you saw whatever it was, 10, 15,000 contracts come in at 4:02, whatever the time was. And there it is. And Fabio is sharing some of the other tools that's on the website where you can kind of visualize all that stuff. And so now that creates a range for today of 59.05 where his short calls are, and 59.45 where his short puts are. And I'm assuming that the people listening understand the way SPX markets interact with gamma levels. Just a very brief oversimplification. When customer sells a credit spread or an option, the market maker buys it. So the market maker is long that option. We call that long gamma. So that tends to be mean reverting, and we also tend to drift there, but it ends up acting kind of like support or resistance, not exactly, but close enough for government work. And so we know that those levels are going to kind of be reaction zones. I like to think of it as reaction zone. And then what reaction we get there is what's going to determine, is going to determine what's going to happen next. And so right now we're pretty much flat. And, so the expectation is if we open up and can stay up and above 59.80, if I just looked at, there was some OI at 59.80 that I'm going to say is probably customer long. Nobody, I think, is selling at the money options at the close yesterday. Now they might be. So I'm just saying that that's a magnet up, and if those go in the money, then market makers have to hedge, chasing that buying into this short gamma zone up here, 6,005. But before we get there, we should stall out. And so that's kind of what I'm looking at in the initial reaction. Conversely, if we can't get over here, we have that 59.70 level, which is a level that Mental Cues software identifies as an X level. And then down to this 59.50 area, there's really not much to stop it. I said 59.55 in my little note. I noticed some OI there, and we should get stally over here. Now, notice this says core resistance. I just want to point out that all that means is that there's a lot of call open interest in it. And just like any resistance, once you're over resistance, well, then it becomes support, it becomes a reaction zone. So we're over this call gamma wall, and that's kind of going to act supportive and going to kind of send us up. Conversely, that becomes magnetic on the way down should we go down. Now, we're basically in a positive gamma regime. Market makers are mostly short options, mostly long options from that big iron condor. So flow should generally be supportive for the day. Should we overshoot the calls on the top, we could get a similar reaction to what we got yesterday, and then a pull back into back within the iron condor, back down near 6,000. And it wouldn't surprise me if we didn't close right there, or same thing happens to the downside if we should break below this 59.50 level or the iron condor. We could go back down, then mean revert back up. That's kind of the broad overview of what I see today. And so what I kind of yesterday at the close, when I saw that, I did a similar trade to what he did. I just sold 5 white iron condors $5 further away on each side. Got about $1.50 for them, 1/3 the width of the spread, which to me is a nice risk reward on that. I generally tend to sell further out of the money and collect less premium. There's higher risk, but that's a management thing. Obviously, don't sit there like a deer in the headlights and let it go through all the way through your strikes. Okay,
And
that's a brief
if I can
overview. I'm going to turn it over to Fabio into questions.
Yeah, if I can ask, Doc, like for those who are not familiar with what an iron condor is, could you explain basically the idea behind the strategy and why obviously you approach that and what is obviously the risk about that strategy as well, especially if
Okay.
you're in zero DTEs options?
Okay, sure. Good question. So for those who aren't familiar, and if you are, just a refresher course, an iron condor is selling at one option and buying another option. So in this case, it was selling the 6005 option and buying the 6010 option. And the credit that you get for that is, and so your risk on any side is the credit you got minus the width of the spread. So let's just say, to keep the numbers simple, you got $1 credit and the width of the spread is 5. So you're risking 5 to make 1. Doesn't sound like a great risk reward. However, now it goes to probability. How likely is that to happen? And when you're selling both sides, you can only lose on one side. So if he got $2 for each side, if he got $2 in total credit, because you do the same thing at the bottom. If he got $2 total credit for the whole trade, well, then he's risking 3 to make 2. He's got $2. The most he can lose is $5 on either side, or 500. So that's a risk reward setup for this particular trade. And again, that's only if you sit there like he does and let it expire in the money and take your loss and go home. There's lots of management techniques you could do along the way. I tend to like to close these out at a % profit, or turn them into butterflies, or do other things, but that's a discussion for another day. Another strategy what I like to do, and let's just use this as an example. So the 1D max is calculated through the software as the max likelihood of where these things get if stuff gets crazy. Okay, we know what happens. We know we exceed statistics once in a while. That's why we have standard deviations, whatever. And I don't know the exact number. Fabio could tell you, but I'm just going to say this is probably a 95% this ain't going to happen. And he's got the statistics there on the back test.
87 or 85, yeah.
Okay, 85%. Okay. And so if I can sell a credit spread above that, chances are that it's not going to go there. So I'm willing to sell further away for less premium. Let's just say, and I look at the chain, let's just say 60-50 or 60-40, 60-70, 60-50, 60-75, 25 wide, and get 50 cents or $50. Now, yes, if it goes through there, I'm risking 2,500 to make 50, the proverbial pennies in front of a steamroller. However, and so there's risk. Everybody asks about that. There's lots of ways to manage it. You could close out your short strike at 3 times the credit you received. You can roll it. You could buy spreads in between it. You can close it out early. There's lots of ways to manage it. My point is, I like selling, this is my preference, further away, giving me a higher probability setup and giving me room to manage it if I want to.
Yeah. And the other thing, obviously, if we look at the statistics, when you approach the iron condor, of course, here we see the success of the 1D max and 1D minimum over 4 years of history. And then obviously we see the success of the iron condor, which is literally if the price stays within the 2 ranges. So it's important, I think, Doc, that for someone who wants to do this type of strategy, you cannot just let it expire. You need to actively manage it like you do every day. So like
you just started breaking up.
Yeah, I'm just saying like that if you are using an iron condor, you should really like actively manage the position. So for those who are just willing to just let it sit until the end of the day, that could be a very risky setup.
Right. Yeah. Yeah. I actively manage it. I have a few different strategies that are off the shelf, over my shelf, close each side at 65% profit, close at 50% profit, turn it into a butterfly, or buy debit spreads above or below the short strike if threatened, turning them into butterflies. There's lots of things that I do actively that if you're not sitting in front of the computer all the day actively managing it, I wouldn't suggest doing it. The default thing that a lot of people do is close your short strike at 2x, 3x the credit that you receive, take that loss and call it a day, or close that short one and reopen further out of the money and sell again. That's kind of the pretty standard way that people manage it.
Yeah.
Now, do we have questions here from people? I'm not really sure how this works. So, Fabio, I'm trying to see where the questions might be, or
Yeah, I'm just waiting.
Comments. I see. Hold on. Let me try and see where the comments thing is.
Yeah, we don't have a question, so let's see.
Comments. We don't have any questions. Oh my God.
Yeah.
That's because I'm such a good explainer.
Okay, we got a question from Tim. If we can go over VIX, Doc.
Okay. Let's go over VIX. Okay. So first of all, just a bit of basic educational things. And luckily we have VIX at 16. So VIX at 16 implies a 1% move over the day. Now, that's not necessarily the implied volatility of today's options. It's actually a little less, but let's just keep it simple. So VIX is the aggregated price based on the formula that the CBOE uses of options with roughly 30 days expiration puts. And so it's the risk index, quote unquote. And so the setup we have right now in VIX is, if we just kind of look back over the last let's change the time frame here. If we look back over, say, since November, since the election, we've had a few VIX spikes based on whatever. We had these spikes during the FOMC. And so the lower bound has become near this 15, 16 level. We were 14 a little bit in December after the election, after the FOMC. And so market participants have been buying 20 and 22 strike calls out into January and into February. And so we're getting this VIX inflection point where above 18, we could have some crashy kind of, or above 17 and a half, wherever the math comes out, we could have some kind of crashy kind of or dramatic performance, because market makers then have to hedge their VIX exposure. If I buy a VIX call, market makers are short those VX futures. And so that as that goes in the money, they have to start buying more VX futures, which makes VIX goes up, which makes volatility improve, increase. Then we have that whole reflexive hedging downward. And I don't know if that answers your question.
Yeah.
So the ES Daily Plan, I didn't write one specifically on ES, you could just kind of convert the numbers to ES. Actually, I've been scalping ES on the sly. Shh, don't tell anybody. I've been scalping ES, doing pretty good using my levels. I just kind of have the charts marked there, and where I have my little if-thens, if over whatever, then so today, if over 59.80, I'm targeting 59.90 or 59, looking towards 6,000. I would just find that level on my ES chart. Yeah, there it is. I'll just find that level on my ES chart. And yesterday, I put in conditional long orders with stops, based on that. If over here by whatever it was, 3 ES, targeting getting out of one at one target level, getting out of the other one at the other target level, getting out of the third at the third target level, with stops based on these other things. Took me a while to figure out how to do that. Then I went to the doctor's office and came back, and I made a few $1,000s. And I got stopped in, stopped out, whatever. And I came back. I said, "Oh wow, that was cool." I did it small with MES because I was going to the doctor's office. I wasn't gonna play with ES with that one. But that doesn't happen every day. I don't want to create the impression that I've got this magic formula, because I don't. The main point is you use the same levels with ES. I know Patrick's done amazing work using ES options combined with SPX options, combined with NQ and NDX, because a lot of the big players in one index is in the other index, and coming up with these blind spot levels and we call them blind spot because while they're not visible to the naked eye, really sometimes on the chart or even on the gamma structure, when you combine them, they end up being powerful levels. And he does some great scalping stuff with that.
Yeah, and I think to add to that, so for those who are trading ES or NQ or any other futures, we also have the gamma levels on futures options. So here, for example, we're looking at the ES net gamma exposure chart. You also have your levels right here that you can add to your chart very easily. So I can go on to the levels, add them here, and then quickly have my ES kind of like levels right there.
Now, Tim Gamma Exposure made a good point. I just got so hung up on SPX, I forgot there's indicators like this for tons of underlying. So NVIDIA is up pre-market here at 152-ish, whatever, after the thing, heading to an all-time high. And so we've got some levels here to look at. So we've got this 150 call resistance. Remember, I just said that just means there's chunky call OI there. I'm going to go out on a limb and saying that nobody sold 150 calls ahead of Jensen Huang's presentation. So those are customer long, dealer short that become magnetic. Once we get over there, if we stay over there, then we head up toward the next gamma levels and then toward the next levels. Conversely, once that hedging is done, if market participants who bought these, let's just say hypothetically, 150s for Fridays, start selling them, then market makers get to release those hedges, sell the shares, and then we kind of can pull back within these levels and these zones. And so NVIDIA, as we know, large market cap, is going to have an outsized weight influence on the indices, on NASDAQ, on NQQ. And for premium sellers like me, just yesterday, the day before, I closed out a short NVIDIA 125 January put and rolled it to February. Took a couple $100. I don't mind it. I have the margin. I don't care. You can make it a spread if you want. And So I would also use this to maybe sell options around these levels. While we're here, let's what I like to do is do a quick around the horn and look at let's take a look at some of the semi names. I think I ran and Fabio will show you in the Discord how you could run the levels. So for the underlying, so looking to see what effect the NVIDIA announcement and the bullishness NVIDIA is going to have. And you see Applied Materials kind of was down, near this level yesterday. And we blew through that level. Now we're at this call level, 180 calls, 175 calls. And if you look at a longer swing model, which he could get into, we could kind of project where this might go to. And while we'll call it a 1D max, might say, well, in a month, a 180, 185 or 180, 190 call debit spread might be a way I'd look to trade. Let's see what AMD is doing. AMD over one, same kind of thinking. What happens when do we get through this resistance and continue it up to the next level? Because a big level, this 150, there's lots of chunky OI at 150 that's been sitting in the chain for a long time. And we can, run through the different names like that. I'm not going to run through every semi name right now. And then I'm going to indulge myself here and take a peek at long-suffering IWM that had a failed Santa Claus rally because of the whole rates kerfluffle. What's his name? Powell killed the Santa rally in IWM. And IWM is just kind of stuck in the mud here. And if I were more technologically proficient at pulling stuff up quickly enough, and we could look at, maybe Fabio could show us the IWM gamma, especially what the monthly looks like. And I'm sure you're going to see loads of puts right down here, and we're just kind of bogged down and stuck in the mud, at near the money, in the money puts. Yeah. So that's another thing I would do. So if you look at that model that he has over there and do a close up on the January expiration, or on the big one, the whole one. Yeah. You see, you can see where spot is. Show us where spot is in relation to spot is 125-ish, 225. So right there. So we have to get over all those in the money puts for this thing to start moving. Otherwise, market makers are just selling. Now, eventually those options decay, and the out of the money options, market makers get to buy that back. And that could be a springboard when, not if, whenever I see something this imbalanced to one side, we tend to mean revert. When that happens, I don't know. And so this is something I'm keeping my eye on. Micron, another semi. And so all the semis are kind of over their quote unquote resistance levels. Basically, this is people that were buying calls, speculators. And so we have to see how all those react. Let's see what else we have. Let's look at the Qs just for fun. In case your listeners haven't noticed, my style is somewhat casual. It's one of the privileges of being over 70 years old. Okay, so, and again, sometimes it's not rocket science, guys. 525, a nice big round number. Us human beings like these round numbers. And so people have been targeting this number. And yesterday we overcut it and pulled back to it. And so, when you're looking at your chart, if you have a dashboard like I do, where I have multiple tickers at the same time, or if not, if you go back and forth or have a watch list, however you do it, I would clearly be watching for the reaction at 525, whether I'm trading QQQ or not, to see, can it get over and head back up toward the levels, or does it pull back into here? And we have some just nice, easy, clean levels to look at. We kind of know, okay, if it's going down here, does it head down here, and how far does it get? And of course, you combine your basic TA. Okay, so we know buyers showed up here. How do they act here, and how does that interact with the gamma levels? You have to kind of think multidimensionally. There's no one magic secret sauce. And I'm not a trading view guru, but I know on trading view you can set up a 6-panel. We could show the different indices you want to see, all at one time with whatever levels you want. SMCI is an interesting name to me while I'm indulging myself. Remember SMCI, once the market darling that then got up with that whole short selling delisting scandal or whatever. And February, they have their come to Jesus moment, so to speak, not a religious statement. They have their come to Jesus moment where they have to kind of say, satisfy NASDAQ for their listing or not. And so there's I have a speculative trade on that they're going to win. I don't know. Your guess is as good as mine. But this 35, 36 level has been a key level for this name. So 35 to 40. And this put support down here at 30 is nice. And because it's juicy premium, I sold some 26s yesterday, all the way down here somewhere, all the way. Again, this is me, not investment advice. Don't do what I do. I'm just talking like I would talk to my trading buddies. I can't get the view the way I want it here. There we go. So I 26 down here. After it had the bad news and the kind of news came out, then once the market kind of got sort of satisfied with what it said, this 25, 26 level became the level. We chopped around, consolidated here, TA 101, not rocket science. And then we started this new regime here, this new trading range. And so that was kind of what I'm looking at. And so this is just a quick example of how combine your TA and whatever you've been using for the months, years, decades you've been trading with these gamma levels to give you extra clarity or extra idea of what might happen at a level. And so this level over here, this where we're at now, this 36 level becomes important because there's lots of calls there, lots of call OI at 35 and 36. And if it can get over and customers hold them, then we head up to the next level. We've been kind of overcutting it and undershooting it. What I believe is what happens is customers buy them, market makers have to hedge buying it, then they sell them, and then market makers get to sell the underlying, and down we go, along with other trading dynamics. It's not one-dimensional that market maker hedging controls everything. But in a name like this, it has a lot of options volume compared to the notional value, especially with chunky premium. There's going to have more influence in hedging than, let's just say, Procter & Gamble, as an example. Other questions? How many times a day does the levels get updated, especially for SPX? Fabio, take it away because you have the new updated feature.
Yeah, absolutely. So let's go into, if we go under our guides, we have a documentation. I'll paste it in the chat. But basically, the gamma levels intraday, they update 9 times per day. So here you see, actually, let me share. Sorry, guys. Here you see the schedule. These new updates will be released as of tomorrow. So we're still finishing up, but basically this is when you're going to see basically the new updates. So from 7:45, and again, just to point out, why 7:45? Because the new open interest gets updated overnight. So I think, Doc, for example, you look at the updated open interest at around 7, because the way it works, the new data gets updated at around like midnight and gets published into the different trading platform at around 5 or 6 a.m. So that's going to be available for everyone at around 7:30. So we're going to get the new open interest, and then we have the opening snapshot, and then throughout the day we're going to have multiple snapshot, and then also towards the closing we're going to have 3 snapshot from 2 p.m. This is important because this is when the big guys kind of like place their closing orders for the next day. So understanding what's changing can be very important, and also the 3:30 snapshot can help you prepare for the earnings session. So like when, for example, NVIDIA releases earnings after the close, you can still get the latest snapshot before the closing to kind of like understand and prepare your plan for the event and so on. So yeah, those are here. Let me just put this into the comments. And to get the levels, we can go back to our dashboard. You can go under our bot ask section. You can type in a ticker like NVIDIA, and you can go on our intraday data. We have our trading view levels right here, but we also have things like changing gamma over time. So like, for example, in this case, we're looking at yesterday's data. We're looking at the timestamp from 3:45 compared to the opening 7:45. So this is okay. This is already updated. So we have the first snapshot. So we have here our 3:45, and this is really the changing jacks from snapshot to snapshot, so you can understand what has changed throughout the day.
So I saw somebody had a question. I'm not sure the context. I didn't see when he put it in there. It was, how do you know when the underlying passes through a coil resistance with a lot of volume that it will go through the 1D max? You don't know that it will. So again, it's always assumptions and if that. If it goes through the resistance and a customer is long, market maker short, then market makers will be hedging in the direction of the move, helping it go up. I'm just using this SMCI as an example because I have it up on my chart. Could say this with, pretty much any underlying. Then it'll keep going up, and then we have trader psychology. Do traders start buying the breakout, whatever? At some point, do they start selling? In which case, market makers can then start selling the underlying, and then we may go back into it. Yesterday, this level breakout kind of held. So we don't know, if it goes through here, it's going to there. Or if it doesn't go through here, it's going to there. So, and when I write my little notes, and those of you that follow me on Twitter, you see my notes, whatever, my notes are always if then. And I learned that from mentors over the years. It's always, if this happens, then I expect that to happen. And if that doesn't happen, then what do I expect? And sometimes the answer is, I don't know what's going to happen. So I'm just going to wait for a reaction level that gives me some confidence. I might not know what's going to happen over here, but I sure kind of think if it's up here, we're stalling, or I might not know what's going to happen in this little range, from 134 to 137. But I'm pretty confident if we get down to here, we're going back up that's what I'm confident. Now I could be wrong. I'm not saying I'm right. So I would wait for high confidence setup.
Yeah. And I think that the goal, Doc, is obviously nobody can predict like an event or a news or like an economic catalyst. So the levels can help you with statistical analysis, so they can support you. But obviously, there's no model that can predict what's going to happen tomorrow, today, if some news come out. So it's always important that you are ready to use the data that is at your disposal to make your decisions.
Any other questions there?
So question from Alpha. So we update them 9 times per day, and then you also have an end of day snapshot.
Yeah. Okay. Now, in real life, I'm a trader, so if there's no other questions, if you want to wrap things up, I got to go get my trades ready.
Sounds good. Thank you, Doc. Thank you so much. And thank you, guys.
My pleasure. I enjoy doing this. And in your comments, feedback, constructive criticism, I'm not thin-skinned. Not that I'll necessarily follow it, but I'll take it into consideration for future presentations, what you found helpful, what you'd like more of, less of, whatever. And Fabio will give me that feedback, maybe gently or maybe harshly. I don't know.
Thank you, Doc.
All right. Take care, everybody.
Yeah, take care. So, guys, to close it out, you can find the note directly into Discord. And if you want to join us, check out our website, mentorkey.com, and you'll be able to access this data together with our dashboard and our data right here. So, okay, thank you very much. And thank you, Doc, again, and good luck with your trading day.
Thanks. Good luck, everybody.